The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today, we'll be continuing our review of signal days from the playbook. We'll be going over 3 days of breakout traders in the markets. Page 51 in the playbook. As I mentioned here, this is one of my favorite best trade setups to look for. This is about the third day a market triggers breakout traders into the market. Now, often this can be a key signal for potential reversal setups. We can often see this on a non-farm payrolls week where they will bring breakout traders up high or bring them down low. But in some cases, as we'll see in some of the examples, we can see a strong continuation trade on the backside of the week in a market that has broken out. Now, as I mentioned here, the first day a market breaks out of a daily high or a daily low and keeps trading, we have new breakout traders in the market, whether this is in the short direction or in the long direction, and that is the first day of breakout traders into the market. So just to review again, Monday, day 1 is our opening range. Day 2 typically expands the range. We can see breakout traders on any one of these days start that move from a previous day's high or low. Wednesday, day 3 is the midpoint range of a week and resets to a new day 1 into the backside of the week. Day 2 is Thursday, and day 3, Friday, is the closing range of the week, Free Cash Friday. Now, obviously, as I mentioned, different calendar weeks within the month can affect how these templates will set up, but commonly, a non-farm payrolls week can show 1 or 2 instruments that typically will set up in this fashion. 3 levels of rise, 3 days of breakout traders into the market. And as I've talked about, it typically can build into a 5-day template where the reversal or an explosive reversal opportunity occurs after payrolls. We'll look at a couple of examples of that. And more importantly, just recognizing that when day 3 breakout traders are in the market, we can have now potentially volume getting trapped up high or traders buying up high or selling down low, even lower. The market can consolidate for an explosive reversal parabolic trading setup opportunity if indeed it presents on the day. Now, it doesn't matter which session you're trading, whether that's Asia, London, or New York. And as I've mentioned in previous videos, if I'm going to be trading Asia, I'll track Asian cross pairs to see if I can find a best trade candidate for the Asian session, a parabolic opportunity. Same goes for the London session, the Euro, Pound, and Swiss, and their cross rate pairs, and of course, U.S. session, indexes, oil and gold. I only trade the U.S. indexes in the U.S. session, as well as gold and oil. But gold can show up in any one of these 3, and again, targeting a 3-session, 3-day opportunity if indeed on the day we have that template present. And as mentioned, this PDF and video will be available in the course section, day 3 longs, day 3 shorts in the course area. These are various examples over the last 6 to 12 months and some recent ones from the past few weeks. This is a chart of the Dow Jones 30. We see it's a non-farm payrolls week. We have a market that breaks out initially right after the beginning, breaks Friday's highs before breaking out on Tuesday, breaking out of the low of the opening range. We have day 1 shorts in the market. That market closes in breakout. Day 1 shorts, day 2 shorts triggered into the market, and day 3 shorts triggered into the market on Thursday. Now, as I mentioned, there's 2 types of templates that I'm always looking for on the longer time frames. There's the longer time frame template of dump and pump and the short-term 3-session dump and pump. So on the day itself of the trade opportunity on the larger template setup, I'm still looking for either a dump and pump or a pump and dump depending on the template that we're trading in. So we can have a day 3 breakout trader that's a dump and pump template opportunity, or a day 3
pump and dump opportunity. 3 days of breakout traders in the market. And whether that's over a Monday to Friday template, how it sets up is the longer time frame template that we're targeting, the larger scalable parabolic opportunity. It's a non-farm payrolls Friday. We have a first green day at the close of our Thursday. 3 days of breakout traders in the market. Obviously, a potential reversal opportunity on the Thursday itself. On the Thursday, we have 8:30 and 10 a.m. major red news, and we have an opportunity 5 minutes after the news to enter in our first starter position. And then once it breaks above our basic model for trade entry criteria, page 29 in the playbook, basic model for trade entries, page 29, and we can be adding positions into this market. And this market reverses quite strongly and closes as our first green day. Now, heading into our non-farm payrolls, we have a market that's coiling sideways before breaking out prior to the non-farm payrolls release. Again, reminding traders, when a market coils sideways underneath of a daily high or a weekly high, it is potentially preparing for a large explosive move, but also, again, recognizing the larger time frame dump and pump template potential. We come to non-farm payrolls Friday, and as always, I never am in the market prior to a major news release, especially non-farm payrolls. After 8:30 a.m., payrolls is digested into the market, and we have that market coiling sideways, and New York Open coiled for the parabolic explosive move on top of the high of the week. So we now have a potential for a range expansion, free cash Friday, the closing range of the week after 3 days of breakout traders being trapped into the market. Again, another example of a DCB on both the Thursday, a market that trades into the close of the session, does not come back, DCB. And then, of course, non-farm payrolls Friday, that market closes at the extreme of the day. A large dump and pump, scalable 5-star opportunity after major red news, 3 days of breakout shorts in the market. Now, the purpose of the PDFs is to show you the different variations in how different markets can present different opportunities. We have an example on gold where Monday breaks the low of Friday, the closing range of the week, but then proceeds to trade through the high of Monday on major red news, and that becomes an outside day. But it also triggers new shorts into the market after hitting the high of day, a day zero template. Day zero is peak formation high, peak formation low, consolidation. And that is on page 84 in the playbook, the day zero setups. And also emphasizing to traders, the 3-day breakouts is a setup. It's a template setup. It's not trying to trade a move every day, but it does give you an underlying thesis. If you're trading a session that has an opportunity in that bias or in that direction with a parabolic setup. But when we get 3 days of breakout traders in the market, this is a reset after breaking both sides. Day 1, day 2 on Wednesday, the midpoint range of the week. Day 3 breakout traders triggered into the market before pumping up near the end of the session and dumping down into the close. That market continues to break lower. There's no major red news on the Friday, day 3, the closing range of our week, and we have a market that's auctioned down before reversing and making higher highs prior to our U.S. session. Higher highs on the inside after a market breaks out is the setup for dump and pump. As we head into our New York window, this market has already established higher highs, coiling sideways at the low of the week inside of our universal EMA basic model for trade entry criteria, and giving us a starter and then an area at low of day level for the parabolic explosive reversal. Remember, on Friday, 2 types of opportunities, trend trades or reversal trades. What type of template do we have for a 3-session, 3-day opportunity on Free Cash Friday? This is a dump, consolidation, and pump template after 3 days of shorts triggered into the markets. Our next example is slightly different. We talk about Monday opening range, Wednesday the midpoint range of the week, and a reset. We have a market that resets and becomes a first red day on the backside on Wednesday, breaking out shorts, continuing trending market that has already broken out Monday, Tuesday. Wednesday breaks out again, coils sideways, breaks out again, and blows off on day 3 in the Asian window before pumping back up and dumping into the close of the week. We have 3 days of breakout traders on the backside of a week. So this is often where traders will count 5 days of breakout traders, 7 days of breakout traders, and I repeat the phrase reset. So when we have a reset on Wednesday and we have a template that is still in breakout and we head into a new week, I will start from the midpoint range of the week into the closing range of the week. We have 3 days of breakout traders in the market, and we have a market that has closed in breakout. Timings, levels, behavior of price, a new week, a new timing cycle. We have the New York Open and a dump and pump template into closing price in the new week. As I've repeat when I talk about the 3 levels that every single trader has when we come to the screen at the beginning of the week and each day. Friday's closing price, the low of day level, the yesterday's low of day level, yesterday's high of day level. Outside of these areas are other time frame traders. If we break out of these areas, other time frame traders can come into the market below and above these levels. We can see breakouts pull back and continue, driven by other time frame buyers, or break down, pull back, and sell off of that level, other time frame sellers. But when the week starts, everything starts from closing price and begins the auction process. When a market closes in breakout, that level can be significant for a potential reversal or trend continuation the following day. How does price behave on the day when we get there? We have a dump and pump template. We have the opportunity. We have a coil at closing price, end of third hour for a starter, then a coiling market inside of our dump and pump coil, our universal EMA basic model for trade entries, an additional opportunity to re-enter this again a third time and targeting a range expansion. But as time decay kicks in, traders would be inclined to be taking profits, either on a full expansion of this lower peak formation, high peak formation, low expansion of the range, or taking profits off as we clear this level, holding some into the close if they felt so inclined. This market closes as a first green day. We have a first green day opportunity that coils into our New York Open above closing price, an example of where we're at the high of day of Monday, but we've had 3 days of breakout traders in the markets. We have a first green day template and an explosive follow-through, parabolic follow-through that, as we've talked about in the first green day, first red day videos, closes at the extreme of the day. First green day, inside day in a new week, new timing cycle after 3 days of breakout traders in the markets. So let's take a look again at the bigger template. Dump, 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 pump and dump into the close, the breakout close. We have a short squeeze reversal inside day right on day 1, new timing cycle. This is something you will see on a Mondays on a market that closes in breakout. The first green day trend continuation trade on the front side of a new week after 3 days of breakout traders in the markets. This is from April, just recent April trade on the NASDAQ. Next example is the euro from October. We have an inside day on Monday, an outside day on Friday that forms a peak formation, low peak formation high. That's a day 0, again, an outside day. Inside day on Monday. We trigger inside day breakout traders on day 2, Tuesday. So we have day 1 breakout traders in the market. Wednesday triggers breakout traders at the high of the week. Day 2 longs in the market. And heading into CPI on Thursday, we have breakout traders triggered again on day 3. 3 days of breakout traders triggered up high. So inside day starts it off. Breakout trade of the inside day, day 1, day 2, day 3 breakout traders heading into CPI on Thursday. This is a 5-minute chart. 5 minutes after the CPI is delivered, we have a first bounce opportunity that carries through into the close of the day. Now, first bounce is on page 101 in the playbook, and as I always specifically reinforce, larger template time frame thesis in place. We have 3 days of breakout traders in the markets. There are instances when the 1 minute first bounce can be used, and in this particular case, with currencies, I will stick to the 5 minute first bounce or first bar entry. This gives traders a great, excellent move into the close again for a 50 pip parabolic collapse after major red news in line with our larger template thesis of 3-day breakout traders triggered into the markets. Another example on the euro of just a different template that breaks out on Friday for day one breakout traders on Friday. Monday breaks out and closes in breakout. Day two longs in the market. And again, importantly, emphasizing that market closed in breakout, and day three blows off in the direction of the breakout. Day one, day two, day three breakout traders in the market. We have major red news on the Tuesday. When we come to our Tuesday session, the market's in breakout. We have a first bar opportunity. First bar is the one that traps volume on the third day, third level. We have volume trapped up high. It's a 1 bar stop, and as I've mentioned, my max stop on a currency pair is 15 to 20 pips. This bar typically is just under 20 pips, but also understanding on a news momentum catalyst, the thesis is that after that fundamental release, aligning that with the bigger time frame template, 3 days of breakout traders in the market caught up high. This is a news momentum catalyst that should follow through, and this gives traders over 50 pips into the close of parabolic collapse after major red news. There's a 10 a.m. news release later that breaks through closing price. Traders can be well at break even, and that acts as a catalyst to complete the move. 3 days of breakout traders in the markets. Long, the reversal trade, and then we can see the follow through on Wednesday, day three, the reset into a FOMC Wednesday on the 1st of November. Next example is from last week. We had non-farm payrolls on the 3rd of May that blew off and reversed, forming a first green day. And on Monday, we had day one breakout traders triggered into the market. Day two continued as a first green day trade after the close of payroll. So again, an example of opening range initial balance. Friday was the first green day. The market makes a higher high, dumps down before continuing in the direction of that first green day direction. Day two breakout traders in the market. And on day three, it blows off in the direction of the trend. 3 days of longs triggered into the market. No daily low levels broken. Easiest way to understand that. We keep breaking new highs and a daily low has not been broken. Wednesday closes as a first red day. You'll also notice marked off Peter Brandt pattern within a pattern, a little rectangle in the breakout. The market's gone into breakout and formed a higher rectangle before reversing. We have our first red day. Heading into our Thursday, 3 days of longs triggered into the market, a first red day signal. We had major red news at 8:30, and I've referenced the closing price level as a neckline. You'll notice all the volume is above Tuesday and Wednesday's closing price levels. On major red news, the market breaks out and collapses with a gap. And very great example. We see this on major red news a lot. The market will break out on news. Traders are trying to chase that move, and that market all of a sudden pulls back. And I repeat the statements. Markets only do 3 things. They break out, they pull back, and they trend. They break out, they fail and reverse, or they stay range bound between a high-low trading range. So the question always is, what is your larger template thesis that you have in place? We have 3 days of breakout longs triggered into the market. We have a first red day. We have a peak formation pattern within a pattern reversal. First red day in a coiling market sideways. Markets that are coiling sideways above the low or below the high are potentially preparing for an explosive move. We have our breakout on major red news, the pullback, and the continuation inside of our basic model for trade entry criteria, giving traders in the area of 30 to 45 pips, again, parabolic, and closing at the extreme after 3 days of breakout traders triggered into the markets. There are a few more examples in the PDF here. This is oil. We'll just go over this briefly, and you can go through these in the they'll be included in the PDF inside of your course room. But Tuesday on the previous week triggers day one longs into the market, closes as a first green day. There's some discussion. Monday could be interpreted as a first green day. Technically, this doesn't really matter. There was a buy low opportunity on Tuesday, but we have day one breakout traders in the market, day two breakout traders in the market. And that set up a Tuesday, Wednesday, Thursday reversal that triggered breakout traders on Friday, day 3 breakout traders in the market that broke down into Monday. We went through this in the first red day video. Once that market definitely broke through Friday's low of day, it confirmed that as a first red day. And also you'll notice the lower low on Thursday for the larger pump and dump template. First red day that broke down on Monday, gave a parabolic first red day trade on Tuesday, and continued to blow off on day 3 on the backside. 3 days of breakout traders triggered into the markets long before breaking down signal day and then aligning with that longer time frame first red day collapse and day 3 blow off in the direction of the trend. Now, I included this recent example on the Dow Jones to demonstrate to traders that once a market breaks out, we can have 3 days of breakout traders, and on the backside, we can still have a trend continuation of the original breakout. Day 1, day 2, day 3, traders triggered long into the market, but also a market that closes in breakout. We went through this last day on the first green day video as an example of a market that closes in breakout. We have 3 days of breakout traders in the market long. The week closed in breakout. So we have a strongly trending market potentially at this point, and this market gave an explosive, beautiful parabolic continuation trade on the backside on day 2 from a market that had 3 days of breakout traders in the market. This is a slightly different example as well on gold. We have a large dumping day on Monday that blows off in the Asian session on day 2. So again, opening range, a large opening range, initial balance that puts in a peak formation low. The market from that point proceeds to work the high. The high of Tuesday, our initial balance, so that Tuesday expanded the range. But we now have a peak formation on Wednesday, our midpoint range of the week. First day of breakout traders triggered into the markets. Now, this is where I want traders to understand that we have a probe that is also a range expansion. So although traders aren't caught outside, the market hasn't closed in breakout, we have breakout traders potentially triggered into the market long. Day 1, day 2, day 3 breaks out on Friday, triggers longs, but also breaks out. That gave a reversal trade on Friday after major red news at 10 a.m. And that market coiled sideways. It closed in breakout. It closed outside of Tuesday's range. So again, an example of where the opening range continued down and put in a lower peak formation high. Tuesday puts in our low of the week, and they work the high. Day 1, day 2, day 3. They close in breakout before breaking Friday's low of day and pumping back up and breaking down. A first red day heading into Tuesday on the backside for the collapse Tuesday on the front side of the new week. So an example, a slightly different example, but working the high, breaking out, coiling, breaking down. Market closes in breakout, even though it's inside the previous day's range. It's outside of Tuesday's range, a subtle variation, and then working the high in 3 pushes before collapsing into a first red day close and breaking down on the new week into day 2. Day 2 typically expands the range. Now, this is also a non-farm payrolls week example, Japanese yen, and also an FOMC Wednesday. So a combination, we see this occasionally where we have the Fed as well as non-farm payrolls. And I've said this is not an unusual template to see on that week. A 5-day template, 3 days of breakout traders, potentially an inside day or some sort of subtle variation. Monday's opening range can become the boundaries. Although we break Friday's low, they break out on Tuesday, they break out on Wednesday, the reset day, dump down, they coil and break it one more time after the Fed. So the Fed acts as a pump. They work into closing price and dump it down before coiling back inside, heading into non-farm payrolls above closing price. On day 3, Friday, the backside, we will see one of 2 types of trade potential opportunities, depending on how they set up. A parabolic trend trade or a parabolic reversal trade. We have a non-farm payrolls that could potentially act as a catalyst. And similar to what we saw on the euro, we have a first bounce opportunity for traders to participate in a news momentum catalyst, a 1-bar stop. Again, a 1-bar stop, and this is a 5-minute chart. Because it's a news momentum catalyst, this should carry through immediately after that coil sideways and the entry criteria is confirmed. It is a news momentum catalyst. If they stop me out, it's a 1-bar stop because now that momentum has come out of the market. The thesis is that this market will close at the extreme for the day after a non-farm payrolls news momentum catalyst released. This gave traders in the area of 60 pips, depending on where they got in and got out, but there's a 70 to 80 pip range on momentum. They held it into the close. It carried through into the next day on the Monday. I don't hold things overnight, but this again is an example of day 3 shorts triggered into the market, an FOMC week, as well as a non-farm payrolls parabolic reversal news catalyst back through the high of Monday. And again, just showing traders a large dump and pump template. 3 days of breakout, traders. So reinforcing, keeping things simple, understand the type of weekly template that you're in, front side and back side, day 1, day 2, day 3, the midpoint range. We have our opening range, midpoint range, and closing range of the week. What type of weekly template am I in? What is my money-making setup? And reinforcing Bill Lipschutz's statement, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. The movement is not what I'm chasing. I'm looking to identify the coil, the parabolic opportunity, because I can scale into that. It's driven by other time frame traders. Catching moves are not scalable. Chasing movement is not scalable. I can grab 75 pips that's completely unscalable, or I can grab 40 that's very scalable and make a lot of money on a coiling market like that. Parabolic trade setups grow your trading account very, very fast. Keep it simple, traders. Focus on 90-10 best trade setups. 1% better every single day, and may the markets go with you.